Hi guys, it's Matt from Optimus Futures. I wanted to do a series of videos about trading psychology and just kind of prepare you for the mental process that you have to go through when you trade. Now, granted, I'm not a certified psychologist. I haven't learned it on an academic level, but I've dealt with enough scenarios and enough issues. I met enough people from the industry, professional traders, and also spoke to a lot of people outside the industry about psychology to kind of basically understand the decision and the process that has to do with trading. Now, psychology of trading, there are unique things that are associated with it, but I think each element basically could be also applied in many areas of life. So the psychological issues that affect people affect them on many levels when it comes to decision making. So I want to start in the next videos, kind of break it down and give you an understanding of the process that you have to go through. One of the things that I wanted to mention, that there are a lot of scenarios in trading where basically we always revert to old behavior, right? And when we revert to old behavior, that's the thing that hurts us the most, and this is when we take things personally. So the goal of those series is not to point out your weaknesses as human beings, because we all have weaknesses, but rather to use the mistakes that you do as a tool to go forward. There's a lot of people who don't like mistakes, and those who don't like mistakes and truly hate them basically cannot progress, because the mistakes are the lessons in life that make you actually go forward. So there is a blessing in them, because this is where you learn where you're making the mistakes, and you learn a lot about yourself as a trader. And some of the mistakes that you do are not mistakes that are done in an extreme manner. For example, when we talk about vengeance trading or trying to make your money back, it's not really done with anger. It's not really done with vengeance, as people say. Those are very small, subtle moves that you do with a mouse when you keep on adding money to lose it positions, when you try to make your money back. And those are the things that actually your mind takes over and emotions take over, as opposed to rationale. So what we want to do is avoid all of that. One thing that I would say about making money and losing money is that, and obviously it's your money. I totally get it. You worked hard for your capital, but in reality, it is extremely important not to take losses personally, and not at the same time, when you make money, not to think that it's going to be there forever when you make the money from the market. So you don't develop some sort of a super euphoria confidence level, because you can go through a lot of winning sessions, but your basic foundation of trading is still bad. And eventually what will happen is that you will lose that money. At the same time, you can have excellent discipline and still make a lot of, I shouldn't say mistake, and still lose, although you didn't make mistakes, because just the market didn't play your way. So what's important between the wins and the losses is really the idea to think about the long run, not about one trade or 5 trades or 10 trades, but really start thinking in longer time frames that I refer to. One analogy I can use, for example, is a business that makes money, but it's still not their money yet. So think about a business, for example, that says the following. It says, if you don't like the product, you can return it within 30 days. Clearly, you cannot book it as a profit yet, because somebody can come back after you sell it. Because somebody could come back and say, okay, we want our money back. So now, although you had it on the books, you gave it back. This is how you have to think about your trading in the short run. Although the market gave it to you, it's not yours yet, right? And when you lose it, it doesn't mean that you lose it forever. So you start detaching yourself from the wins and from the losses, and you start thinking about other concepts, right? So one of the concepts that I'm going to talk about is not to add money to losing positions, is a psychological factor and what it does. To think more about mathematical variance, Variance plays a huge role in trading. So a lot of people who do not understand the concept of variance will basically, what they do is that they paper trade, and then they go and they start trading, and they will lose 2-3 trades, and then they'll go back to paper trading, which does nothing, absolutely nothing, because from a mathematical standpoint, they didn't do enough trades to prove whether it's going to work or not. And again, I understand this is money, so I'm not coming from a place that I'm judging people. I'm just relaying what should be done. I'm not suggesting that you should be a mathematician. I'm not suggesting that, right, at all. But you still, nevertheless, have to understand the concepts that go in trading and the math involved. Let me give you an example. Let's say you made 10 papers, and you would have 10 papers, and on each paper you would write the numbers. The first 5 papers you would write 1, 2, 3, 4, 5, and then have another one. Actually, it's 11 papers. Then one in the middle that says 0, and then have -1, -2, -3, -4, and -5. Now wrinkle all of them up, put them in a bag, shuffle it, and then I dare you to start. And please do this experiment, okay? And so now start taking the numbers out. Start taking them out of the bag and put them back in. You will see over time, okay, you will convince yourself that what is mathematical variance, which basically you get different results every single time. You can win on every single trade that you do. It's just impossible. Some people just take it personally. They think that they could actually win on every single trade every day, and it doesn't happen. You can go through series of losses that you think you're the worst trader in the world, or you can make a lot of good trades that they just keep on coming, and the market gives you an illusion that it's easy to trade. So again, when you go through those things, you have to start thinking of them in terms of variables, in terms of mathematical variance, statistics, and all those things. So again, I'll start here a series of concepts when we're going to talk about improving your psychology, your idea of how to approach trading, not from a personal standpoint, but from a mathematical standpoint, being stronger, I should say, psychologically when you approach it, and not to have the old habits that you had in the past. Now, let me tell you this. Just because I'm going to tell you all those things, and just because you're going to be aware of it, it does not mean that you will be able to fix them right away if you're going through those mistakes. However, being conscious of them, it's already a step in the right direction. The best traders in the world, in my opinion, they have it in the back of their mind. So they have this subconscious learning that they've already been through, and when it happens, they don't have to think about it consciously because it's in their DNA. And this is your goal. Your goal is to get to that stage, right? So we're going to go through those steps. We'll name each video in the right subject of exactly what I want to address, and then we'll create also a link on each video that will allow you to go to the next one, and they're going to be interlinked, so don't feel like you're losing out on those things. In any case, that's it for now. Tomorrow I'll start recording them as I start thinking about more topics that I would want to cover. And again, I'd love to earn your business here at Optimus Futures. If you're a trader, we'd love to help you out. We're self-directed. Our customers are self-directed traders. We basically service them. They choose the platform, data feeds. We help them with the connectivity, technical support, and everything else. So please like this video. Give us a call here, 1-800-771-6748, and I'll see you on the next videos. Thank you. Bye.